Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference. Joining me for this segment, we have Joanna Gallegos. She's the co-founder of BondBloxx. We're going to discuss opportunities for fixed income in 2023. It's great to meet with you, Joanna. Welcome to Trade Talks.
Thanks, Jill.
And after one of the worst total return years for markets in 2022, where do you think, or why do you think fixed income presents an opportunity in 2023?
Yeah, well, essentially we think the silver lining of last year having been a historic year for fixed income losses across the board is that the market for fixed income is generally reset for 2023. You know, we've had yields that have doubled in credit since 2022. Rates are as high as they've been for the last 15 years. So there's room for optimism in 2023 because there's a lot of opportunity across all the asset classes in fixed income that probably wasn't there in the last year and wasn't there for over a decade. So.
Right, so just like the equity market, this valuation reset almost needed to happen and create a fresh start for the asset class.
Yeah, we'd say that.
Do you expect market volatility to persist in 2023?
Look, there are still headwinds facing the U.S. economy and the global economy, and so we do think there's going to be more market volatility coming up, but there's a lot more that we know in 2023 that we didn't know in 2022. So we understand exactly how the Fed was going to react to inflation. We think they're near the end of their height rate cycle. And we just feel that like investors can have more confidence in what is ahead of them, although we do expect more market volatility.
Right, so of course I guess the risk to that is credit markets moving lower before they move higher.
Yeah, I'm sure all of us would love to know what the bottom is, but we can't know what the bottom is. I think there are some fundamentals in fixed income that are really, really positive for investors to come back in. One of them is that the financials and the balance sheets of corporations are a lot stronger during this downturn than they were in previous downturns. Many of the low rate environment before this has given corporations an opportunity to refinance their debt and to start from a position of strength. So sure, there's a possibility that credit markets will go down again, but there's just a relative difference here where yields are higher to cushion some of that downturn in investors' portfolios. Fixed income would actually help diversify a portfolio in a way that it hadn't done again in over a decade. So there's some positives there.
And no one ever wants to say it feels different this time, but it really does feel different. Let's say even just 08, 09 feels as if, to your point, balance sheets have been cleaned up. There are frameworks in place more so than they were crises prior.
Yeah. And
do you still expect an elevated level of dispersion within the asset class?
Yeah, I think one thing at BondBloxx that we focus on is giving people more granular exposure to fixed income. And so in different industry sectors, even in high yield, you're able to see exactly how they perform differently. So within asset classes, there's a massive amount of opportunity. Last year, we saw 1,000 basis point difference between the best performing sector and the worst performing sector. And month over month, there was a lot of different outcomes if you could sort of look and click into different asset classes. So yes, we do think that'll continue because it already exists. It's just whether or not you can look and see that. Triple C's in January had a really, really good performing month versus single B's and double B's. It's happening each month, it's happening each week, so we're able to track those things a little bit better.
So as you look out in 2023, is there a particular sector that looks to outperform?
I don't think we would call any particular sector that looks to outperform. I think we want to give people awareness.
Or could outperform.
Yeah, I think we want to give people awareness of like how to be following those sectors and looking at them more closely. Now with exchange traded funds, like our funds on in BondBloxx, you can watch those sectors more intentionally now. So we wouldn't call any one sector as outperforming or underperforming, but we definitely think that investors have an opportunity to shine a light on those markets and what's going on.
All right, we appreciate the insight, Joanna. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.